Hello, I'm excited to be here this evening, to present to us another beautiful topic that concerns the way we operate, the way we carry out things. I want to bring to our notice today understanding your role in VAT handling. Our name is Chilacon Global Consult. We have been known for our brand, and we are known for bringing training to the doorstep of our followers. Please, as we go on this topic, handling of VAT, please, you can drop your comments in the comment section. You can subscribe to our YouTube channel so that anytime we drop a video, you'll be aware of the video, and then you'll be in tune with what is happening even in the country and around the world. So today I want to bring to you understanding your role in VAT handling. Whether you are an employer, whether you are an employee, or you are a consultant, you need to understand what is demanded of you when it comes to handling of VAT. When it comes to handling of VAT. So first of all, we need to understand what is VAT. Many people want to understand what is VAT. VAT is an indirect tax on goods and services that is imposed by the government. It's an indirect tax that is imposed on goods and services by the government. VAT is value added tax. VAT, it is value added tax, and it is directly imposed on goods and services. So we are going to, the next slide will take us to why is it important that we get to understand what VAT is. Because it is a statutory obligation to all individuals and companies who serve on behalf of Nigeria Revenue Service. As you may be aware now, the word Federal Inland Revenue will no longer subsist. By next year, January 2026, we will now have a new revenue which is now referred to as NRS, Nigeria Revenue Service. Nigeria Revenue Service is empowered to collect this tax on behalf of the government. So they have been empowered to collect this tax on behalf of the government. That is why it is a statutory obligation. In as much as you are involved in business transactions in Nigeria, you are under obligation to collect VAT, whether you are an individual or you are a company. So in the process of this training, we're going to define what is goods, or we're going to define what is service, and we're also going to understand what is our duty, who should VAT be charged on, and who should VAT not be charged on. So there are VATable goods and non-VATable goods. There are VATable services and there are non-VATable services. So please come along with me as we take this step one after the other. Under the new Act which has just been passed into law, talking about section 144, define VAT in its own way as value added tax charged indirectly on goods and services, as I have earlier mentioned, on taxable individual or company. You know, when you register your company with the Corporate Affairs Commission, when you get your company approved, you get all your documentations given to you. Before you can even open a bank account, the bank will refer you to the tax authority to comply with what we call a team validation. And that team validation is to ensure that all individuals who operate a company will be compelled to make payments to the tax authority when you carry out a transaction. So you are being included in the tax net. So that era of it's not my business, I don't want to look at what the government is saying, that era is gone. Don't be living in delusion. This is reality. So the earlier we get to understand this, the better for all of us. So what is goods? What is goods? What do we refer as goods? Items that are physically present. Items that are physically present. For example, you imported goods from outside the country into your own country. These goods are physically present. We can see them, we can feel them, we can touch them. They are tangible. They are referred to as physical goods. Then there are also another type of items which we also call items that are imported into the country, items that are assembled or installed in the country. In the assembly process, each process can attract VAT. Or when you are installing, you are an engineer, you are installing a plant, you can also attract VAT. Then, if you are also a beneficiary owner of the rights in or over the goods, is a taxable person in Nigeria, and the goods or right is situated, registered, or exercisable in Nigeria, you are liable to pay VAT. So let's move on. Still defining what goods is. Let's move on, please. So what is service? What do we refer as service? There are some people who are into consultancies. There are people who are agents. There are people who serve as a middleman between the buyer and the seller. You know, they don't directly involve in the goods, but they render service by facilitating the transaction, and by so doing they earn a commission. So when they earn a commission, their commission is referred as a service charge on the service that they render. So they are liable to pay VAT on that service that they render, and they have earned income. So they are to pay VAT on it. So please, as we continue, make your comments in the comment section for areas that you need clarification, so that we can come back and address such concerns. Then you can also subscribe. You can also click the like button, so that we'll begin to generate traffic on this exercise. It's a very interesting topic that you need to know, because when you have an understanding, you cannot be tossed up and down. You cannot be acting under ignorance. You'll be able to know how to mitigate and how to arrange yourself when it comes to tax issues. So when a service is provided to and consumed by a person in Nigeria, that you call it a service, it's not like physical thing that you can see. Regardless of whether the service is rendered within or outside Nigeria, or whether or not the legal or contractual obligation rests on a person within or outside Nigeria. So all these kind of services, whether you are a consultant, you render your service to person that is in Nigeria or to person that is outside the country, as long as you reside here in Nigeria and you render that service, you are obligated to charge VAT. When the service is connected with existing immovable property, including the service of agents, expert engineers, architects, valuers, and where the property is located in Nigeria, service charge is accepted. Is expected, and you are expected to charge VAT. So we're going to see in the long run that because of this obligation on you, if you do not charge this VAT when you are supposed to charge it, you now take full responsibility. You now do what is called self-accounting. You do self-accounting, that is, you pay 100% of that charge. So we're going to see the next step right now. We're going to see the next step right now. So let's see what is supply between connected person. Supply between connected person. There are sometimes that we have one man owning two companies, and they can move either goods or services across the two companies owned by one man. So that kind of arrangement are called connected person. Connected person. Okay, before we take this, let's take this other one. What is taxable supply? Under section 147, what is taxable supply? Because we'll be talking of, yes, the individual must be a taxable individual. So what is a taxable supply? This is when an invoice or receipt is issued by the supplier, or where goods are delivered or made available for use. A payment is due or received by the supplier in respect of that supply, whichever occurs first. What this simply means in this section 147 is that as somebody who is acting as an agent to the tax authority, you are under obligation, you are mandated that at the point of issuing invoice for goods or for service you rendered, you are supposed to include VAT charge on that service that you are rendering on your invoice. If it is a receipt you are generating, you are supposed to include that VAT charge on that your receipt, so that when you are making payments or when you are receiving payments either to a supplier or from a supplier, that charge is not your income. It is a third party income, which is referred to as government income. So you render it, you do what is called returns to the tax authority. You do your monthly returns to the tax authority to show that so and so services has been carried out, or so and so goods have been rendered, and these are the transactions that was involved. So we charge VAT on these customers, and these customers charge VAT on us. That is where we have input VAT and output VAT. We are going to come to that in a very short time. Please take a break and then digest what I have talked so far, so that we can come back again. Thank you. So welcome back. Let's continue. I've just discussed on this supply between connected person, and I said a taxable supply shall be estimated to take place where the supplier and the recipient are connected persons and invoices are not issued. You get this kind of transactions. Is one man, excuse me, it's a one man that owns these two companies, and they are moving transactions across the two companies. I have a case like that husband and a wife runs different companies, but because they are connected, Because they are connected, they may not necessarily issue invoice to themselves, but they are moving goods and services across the two companies. So the tax authority view them as people that are connected. So whether the goods moved from one party, company A to company B, does not stop them from invoicing each other VAT in their service delivery. So for example, a supply of goods that are to be removed, the time of removal of the goods in such case is a connected transaction. Number 2, a supply of goods which are not to be removed at the time when they are available to the recipient is also a transaction that is between two connected persons. Furnishing of service upon the commencement of the furnishing of the service, or you have an incorporee when such incorporee becomes available for the use of the recipient. We are going to come to the issue of incorporee. Who is an incorporee? We are going to get to understand that. Just be patient and follow through. Next, we are still on the supply between connected persons. For example, a supply of goods that are to be removed, time of removal of the goods, a supply of goods. Okay, I've just taken this one. Let's move to the next one. What should you also think that is key and important in the rental or lease agreement? Yeah, there are situations whereby we go into an agreement under lease or rental. Such transactions also attract VAT. Where goods are supplied under any rental or when services are furnished under any agreement or law which provide for periodic payments, they shall be deemed to be successfully supplied for successive points of the period of the agreement or as determined by such law, and each successive supply shall be deemed to occur when payment becomes due or is received, whichever is earlier. So what this part is saying is that as long as you have entered into a contract of lease and you have all agreed for the period that this lease is going to take place, for each of the instrumental transactions that you are going to make, or for this period that this lease is going to take place, you must apply VAT on it, on the transaction. Number 2, where and to the extent that taxable supplies are 1. Progressively or periodically. Yes, there are some times that lease are a progressive type or they are period type of lease that is made under any agreement or law which provides for the consideration of that supply to be paid in installments or periodically. So let's move on. So what should be the VAT rate that you should apply? Obviously the VAT rate, it was debated by the Senate and by the House of Rep and even the governors. They have to come together. At the initial time, the committee that was set up to work on this law, they were proposing that the VAT rate should graduate, should graduate from 7%, 7.5% to 10% and thereabout. But it was later a consensus that the VAT rate should remain as it is. It should not increase. So the VAT rate remained 7.5%. And now, how do you determine the value of taxable supplies? Using money now. Using money, you will raise your invoice amount after you have calculated the items. with their rates and their prices. You rate the invoice amount. After you have gotten the total invoice amount, you will add VAT, which is chargeable to the consideration. Assuming you have raised your invoice amount to be 6,500 naira, you will apply a VAT of 7.5% to that 6,500 to have a new figure. You can do the max and you come up with a new figure that the person is to now issue as an invoice to his supplier, to his clients. Then when there is issue of non-money, this one money is not involved. What do you do in this case? The tax authority is saying that because there was no actual value placed on the goods or the services that you are rendering, you're going to take market price of that value. Take a market price of that value of the supplier. So what it means by market price is that you're going to go to an opening of a business center or a business operation environment and inquire from different sellers what could this price be. That is, if they were to exchange these goods in a normal transaction, that is trading on a normal transaction, what should this price be? That is what is referred to as market price. So you look at the market price of the goods that is to be supplied. You charge your VAT on it. So that is for a non-money transaction. How do you apply the VAT? You use the market price to add your VAT charge. Then if it is a mixed goods, where a taxable person is not the only transaction to which a consideration that is properly attributed to, what you do in this case, you separate the transactions so that it can be clear. You separate the transactions so that it can be clear. There are some transactions that some are taxable or VATable and some are not VATable. So you select the goods that are VATable and you VAT them and you submit your returns to the tax authority. Then the non-VATable goods, you also still submit them, but they are not VATable. So there is no obligation on you to pay VAT or to charge VAT on those that are not VATable. But that does not stop you from filing. Now, how do you determine market value for not money supply? I just explained that to you earlier, but you can still take this. The market value of a taxable supply, that is where you cannot raise the amount, you cannot really place the amount of the value arbitrarily. You go to use what is called market price. So the market value of a taxable supply where it is not for money's consideration or for a supply between connected persons shall be the money consideration as may be payable by a person in a transaction at arm's length. This is a normal transaction that, assuming I want to buy this thing, what is the market price at the moment? The market price at the moment is what is considered to be used to apply the VAT. So let's pause for a while and let us reflect. Then we'll come back. Thank you. Let's continue. Another section, section 150. Section 150 talk about change of VAT on charge of VAT on imported goods. How do you charge VAT on imported goods? You know that goods that are imported into the country are subjected to a lot of taxes. You have excise duties, you have stamp duties, you have all other charges on the imported goods. So now we want to know how do we apply the VAT on imported goods. Now on the VAT Act, under this section 150, the value of imported taxable supply shall be the amount which is equal to the price of the taxable supply imported. That is the value of the goods that is imported, the amount that is involved in the importation. You are going to take that amount, and then you will add the different other taxes. For example, you will add taxes, or we call it excise taxes, call it stamp duties, and other charges levied either outside or by reason of importation into Nigeria other than VAT imposed. Before we charge all those things into it, then include cost by way of commission, parking, transport and insurance up to the port or point of entry. Now, what is the next thing you do? Before you can now apply your VAT on the imported goods. So what it means is that the VAT charge is going to be calculated alongside the excise duty. So I don't know, the excise duties is calculated on the goods that is imported. So the same thing, the VAT is calculated on the goods that is imported. Then you cannot add other charges, import charges and all of that. But the VAT must not be missing in that charge. That is what the tax authority is trying to address us on. Now, VAT on non-resident person. Non-resident person. This is somebody who do a transaction but is not residing in Nigeria. What does the tax authority require the person to do? Is either the person will nominate somebody, or he will register that business or that transaction with the Nigerian tax authority. Let's take this. A non-resident person who makes taxable supplies to Nigeria shall register for tax. He must register for tax. If he refuses to register for tax, he can elect somebody to use as a representative, so that person can handle all these other issues for him. So he must register for tax and include VAT on its invoice for all taxable supplies. Because he's going to he's not a resident person in Nigeria, but he's doing a transaction. He's doing transactions, so he has to register and be included in VAT, and he will include his VAT on his invoice for all taxable supplies. But when a non-resident person is making taxable supply from outside Nigeria to person inside Nigeria, this case the person is outside, but is making supplies to a Nigerian who is inside the country. The taxable person to whom the supply is made in Nigeria shall withhold the VAT due on the supply and remit it to the service. This person now is outside, but is rendering a service to a citizen who is already in the country, and is raising invoice adding VAT to the citizen that is in the country. The tax authority mandate that person who is in the country here, a resident here, to withhold that VAT and remit it to the tax authority, that is Nigeria Revenue Service. The next step is that the service may be noticed, appoint the service, that is the Nigeria Revenue Service, may give a notice or appoint any person, including a non-resident suppliers of taxable supply, to collect the VAT and remit to the service. So these are things we need to understand. We are still on the non-resident person. Where a person appointed under Section 3 has made a taxable supply to a taxable person in Nigeria, the taxable person shall not have the obligation to withhold the VAT, except where the period appointed has failed to collect the VAT. So let's take the next one. Where a person appointed under subsection 3 does not process payment in respect of the supplies but receive commission related to the supplies, the appointed person shall use the mechanisms with which it collects its commission to collect the VAT. I hope that is clear. What this means is that you are appointed by the tax authority under this section, and then payment is processed in respect of this supply that was made or that was received, and then you apply commission to it. The appointed person in this case is under the obligation to collect tax on its own commission and then remit it to the tax authority. We are still on non-resident person. A non-resident person that make a taxable supply to a person in Nigeria may appoint a representative for the purpose of compliance with its VAT obligations. So a non-resident person that make a taxable supply to a person in Nigeria, you remember we discussed it. You are not living in Nigeria, but you are doing a supply to somebody that is in Nigeria, and then you are raising VAT on your invoice. The person that is in Nigeria is under obligation to withhold that VAT. Is under obligation to withhold that VAT in compliance to the tax law. To withhold that VAT and remit it to the tax authority. The service must issue guidelines for the purpose of giving effect to the provisions of this section, including the form, time, and procedure for filing returns and payment by non-resident suppliers appointed by service under subsection 3. So where a taxable goods are imported into Nigeria, goods that are subject to tax, they are imported into the country either through an online electronics or digital platform operated by non-resident suppliers, and VAT has been collected by the service or any person appointed by the service, the goods shall be further subjected to VAT before clearing upon provision of payment of the VAT. So you must present evidence of payment of VAT payment before you are allowed to clear your goods. Now let us go to remittances and recovery of VAT. This is under section 152. Under section 152, part 2 of it. So why do you remit VAT that you have collected on behalf of the tax authority? Remember that before now, you are recommended to do a return to the tax authority on a monthly basis, on or before on the 21st of the preceding month. But this time around, the law has changed. It's requesting us to remit within 14 days of the preceding month. So you must comply with that aspect of the law. So if you collect any VAT on behalf of the tax authority, on behalf of the tax regulatory body, you are to remit it to the tax authority within 14 days. If you fail to do that, penalties will be charged to you and you'll be made to pay, or you will face the law. So a taxable person shall pay VAT to a supplier on the taxable supply made. Simple. If you are a taxable person, you have been elected to collect tax or to pay tax on behalf of the tax authority, you are to raise VAT on your supplier, or you are raising a receipt or raising invoice, whichever one, because invoice has to do with goods received but payment has not been effected, or goods are delivered and payment is expected. But receipt has, on the other way around, receipt is more or less like instant transactions, that you receive instant payments before goods are released. That has to do with a receipt, but that does not stop you from applying VAT to the service or to the goods. Number 2, the VAT paid by a taxable person under subsection 1 shall be known as imputed VAT. Imputed VAT. So what do you understand by impute VAT? Impute VAT are invoices suppliers issued to you as a customer, and they charge VAT on it. If you pay for the goods and for the VAT, you take record of that VAT that you are being made to pay. It is called impute VAT. Impute VAT. We are going to come to the area where you recognize output VAT. So the input VAT is connected to supplier transactions. So when a supplier is issuing you invoice for the goods that is delivering to you, is issue you that invoice alongside with VAT charge. So the VAT charge that you pay along with the good is called input VAT. Please take note of that word, input VAT, under section 152. Then under section 153, a taxable person who make a taxable supply shall maintain a sequential VAT invoice. You know how the template should look like. You must maintain good records. You must furnish your VAT invoices transactions to by way of filing to the tax authority. So what should this invoice contain? Just like going to meet a printer, asking a printer, people who print documents, who print receipt booklets, tell you the format, the template that the invoice could take. Number 1, it can take the supplier's tax ID. Tax ID here means TIN, tax identification number. The invoice must have a number, and the name and address of the supplier must be taken, and then the supplier's a corporation or business registration number as applicable. So it's a ROC number or IT number or business number that is registered as it were with the CAC must be quoted in this invoice. The date of the supplier, name of purchaser or clients, gross amount of transactions, and then VAT exchange of the rate. VAT exchange and the rate. The VAT invoice shall be invoiced on supply whether or not payment is made at the time of supply. VAT invoice shall be issued by a taxable person making a taxable supply or such other person as may be appointed by the service. For the purpose of subsection 1 of this section 153, the service may direct any taxable person who makes taxable supplies to adopt the use of electronic invoice, provided that it gives a notice of at least 30 days to 7 days to the person. I hope that is clear to us. Please put in your comment sections any area that you want us to clarify, that you want more light on, so that we can come back to clarify them. Yes, you can put that in your comment section. Please don't forget to subscribe and like and share so that other people can benefit from this class. Section 153, remittance. We are looking at remittance. Under section 154 here, we say a taxable person shall, on making taxable supplies under chapter 6 of this act, collect VAT at the rate specified in section 148 of this act. The rate specified in this section 148 is 7.5%. Is in this section 148. 2. The VAT collected by the taxpayer person under subsection 1 shall be known as output VAT. This case now is a customer, you now that were treating with a supplier who supply you goods. Now you, the same person now who was a customer to the supplier, you are now a person in the position to issue invoice to another person. Probably you are supplying goods to another person, or you are rendering service to another person. You know, just get the triangular movement of what we are discussing here. Now you are the customer now issuing invoice to somebody to deliver goods or service to. So the tax authorities require that you, as an individual raising invoice, should charge VAT, and that VAT is called output VAT. It is called output VAT. Please take note of input VAT and output VAT. How do you relate them? Input VAT is basically charged from the supplier to his customer, and output VAT is charged from you now as a customer to another person who is who maybe we call maybe the service, the client, or somebody you tend to say that you are supplying to, you know. So that is output VAT. So take note. Next is under section 155. There are some cases, there are some persons that you cannot charge VAT to, but rather they will even if you charge VAT to them, they will withhold it. They will withhold it. They will pay it. They will pay it instead of giving you the your invoice amount and your VAT. They will withhold it and then pay it on your behalf to the tax authority. So that is what this section is all about. Without prejudice to any provision of this act or any other tax laws, the following person shall collect or withhold VAT on taxable supplies made to and remit it to the service within the time prescribed by this act. Then you know that we have this law is broken into different sections. You have the administrative sections, you have the tax sections, and you have the governance aspect of it. So it is saying here that the Nigerian Administrative Act 2025 or any regulation made pursuant thereto. Number 1, federal, state, local government and their respective ministries, departments and agencies, or any other person appointed by the service to collect or withhold VAT for the purpose of this part. You know, there are some international corporations that when you issue them invoice as their supplier and you include your VAT to it, they don't pay you the amount with your VAT. Rather, they will withhold that your VAT and still apply what is called withholding tax to the invoice that you have issued to them. People like companies like Shares, NAPC, and some big companies that you render service to, they will not pay you your VAT. They will withhold it. So the same thing applies to the federal government. You raise invoice to them, they will not pay you the VAT. They will withhold it. They will pay it on your behalf, and then they will also charge you withholding tax based on the type of transactions you render to them. So the service may direct a taxable person to whom taxable supply is made in Nigeria and issued an invoice on which VAT is not included to self-account for the VAT payable and remit to the service. You know, I talked about this before now. Told you that if you raise invoice to a client or to somebody that has benefited the goods that you supply, and you do not include VAT to it, it will mean that you will be the one to pay the 100%. Before now, you have to deal with the issue of input VAT and output VAT. But here now, you will now deal with the both, because you refuse to include your charge to it. You will self-account for the VAT that is payable and you remit it to the service. So it's a matter of law. So when the tax law said that you should charge VAT, charge your VAT, whether the person pay or he did not pay, charge your VAT as long as you are a taxable person. Charge the VAT and remit it. But if the person failed to pay, you can as well file the invoice to the tax authority, and then they will know how to handle that. The remission of the VAT under section 1 and 2 shall be accompanied with a schedule showing the name, tax ID and address of the contractor or suppliers, invoice number, gross amount of invoice. I told you the template to which this thing is done. So as you are doing your returns, all the information about that transaction should be in that template as you are doing your return to the tax authority. Thank you. Let's move on. The VAT collection withheld or self-accounted under this section will be remitted to the service on or before the 14th day of the month immediately following the month of the transaction, or as may be prescribed by the service. Before now, it used to be 21 days. It used to be the preceding month used to be the 21st, but now it has come to 14th. So you take note of this and don't be wanting when it comes to matter of compliance. Compliance is very key when a business actually want to succeed, because non-compliance issues are highly risky for a business or for a company, in the sense that it can disrupt operation. You can even stop operations when they come calling for all this kind of compliance thing and you are defaulting. So it's better to save the embarrassment and comply and ensure that on your part you have complied, so that you'll be able to defend yourself. So it's now 14 days, no longer 21st of the preceding month. So a person having an obligation to collect VAT under Chapter 6 of this Act shall keep proper records and make appropriate returns and remittances, and all provisions related to compliance obligation in Chapter 6 of this Act, the Nigeria Tax Administration Act, or related laws shall apply to such person as though it is a taxable person. So if you fail to do any of these things, the tax law will not be considering the second person or the person that you issue invoice to and you refuse to charge VAT on. No, they will deal with you only because you are to now self-account for that VAT that you refuse to charge. So it's a very important matter that you need to take into consideration. A taxable person shall, not later than the due date for rendering the relevant tax return prescribed by the Nigeria Tax Administration Act 2025, where the output VAT exceed the input VAT, you remit the excess to the service. What this means is that you, in a point A, suffer some VAT, which we call input VAT. You, in a point A, benefited some VAT that you collected for the government or collected for the tax authority, which is called output VAT. So now, if what you have paid out, if what you have issued out to other customer, which is output VAT, exceeds, that is surpass the input VAT, what you do is that you remit the excess to the service. So you compare notes, compare notes. You check what you have issued to customers to pay on your behalf, or that they have given to you and you have paid to the tax authority, and you check what you have also paid alongside to the goods that was supplied to you, which was input VAT. So if what you have collected from other persons is higher than what you were charged, you are paid, you are to remit the excess to the service. Or if input VAT exceed the output VAT, but you are now entitled to utilize the excess tax as a credit against subsequent months. Please take note of this section 156. Take note of it, it's very crucial. This is the crux of the topic that we are discussing. So relating input VAT and output VAT, So he is saying here that when input VAT exceed the output VAT, you are now entitled to utilize the excess tax as a credit against subsequent months. So a taxable person shall be entitled to a refund of excess VAT not utilized as a credit. So you are entitled, in this case, you have to write letters, documents, and send to the tax authority and ask them for refund, or you utilize it as a credit. So you must do that, otherwise you forfeit that benefit. So an importer of taxable goods shall, before clearing those goods, pay to the service of VAT on the goods. So when you bring in goods into the country, you pay the VAT on those goods to the tax authority before you are allowed to clear. So you have to show evidence of VAT payment on those goods before you are allowed to start clearing your goods. The person whose supplies are chargeable to VAT at 0% shall pay VAT on taxable supplies consumed in the production of its supplies, and may therefore request of a refund of the VAT paid. There are sometimes mistakes are done, mistakes are made. There are goods that are not chargeable. For example, drugs, medicines, agricultural products, those goods are not VATable. Prior you made a mistake and you charge VAT on them, and they are not supposed to be charged. You can request for refund of those VAT that was paid. So let's move on. Under state section 153, input tax incurred by a register or on any taxable supply, including service and fixed asset made to such person, may be deducted from the tax payable by the person on its taxable supplies at the end of the tax period in which the supply occur for the consumption, use, or supply in the course of making taxable supply, provided where any input tax is incurred in making both taxable and non-taxable supplies, only the production related to making supply may be deducted. So when inputs, tax, that is by the time you are putting materials together to go into production, there are some that are VATable, there are some that are not VATable. So we will carefully remove those ones that are not VATable, and the ones that are VATable, we include them in the cost of the production. That is the one that is relevant to the tax authority. So the input tax shall be allowable for deduction within 5 years after the end of the tax period in which the input tax was incurred. So the input tax which may be deducted in line with subsection 5 shall be limited to taxable supplies made as from the commencement of this act. So the provision of sections 190 of this act shall supply in respect to sales or transfer business sold out of trade, business, profession, or vocation. So let's move on. Now we are still under section 153. We are about to round up. We are rounding off now. Section 153. A taxable person making a taxable supply shall implement the fiscalization system deployed by the service in accordance with Nigeria Tax Administration. So this means that it's only the tax authority that will determine the way you want to implement the collection of tax and administration of tax. It's their sole responsibility. The fiscalization system may include fiscal equipment consisting on electronic devices, software solution, or communication system involving a secure network or any such combination of the component of the electronic invoicing and data transfer as the service may prescribe or deploy. So it is only the tax authority that know the method, the template under which you want to implement the tax collection, either the way you want to collect tax from electronic devices or from communication system or invoices. So it is their prerogative to do so. So going to the final, subject to exceptions in part 14, part 4 of chapter 8 of this act, VAT shall be charged on all taxable supplies in Nigeria. So under section 145, all goods, services that are subject to VAT are to be charged. There are some exceptions in part 14, section 186. So those are the ones that are not, you cannot VAT them. Oil and gas exports, no, that is operating under free trade zone, you cannot VAT them. Crude petroleum oil and feed gas for all processed gas. So this thing is for your own consumption. Take note, these are not vatable products. Baby products, they are not vatable products. Manufactured sanitary towel, pad or tampons, they are not vatable. So shared passenger road transport services, these are not services that are vatable. Let's take this: purchase or hire, rental or lease of tractors, plow and other equipment used for agricultural purposes. They are not vatable. They are exempted from the VAT. So take note of those items that are exempted from the VAT. Even government licenses, land or building, including interest in land or building, they are not vatable. But commission that is earned on land or building is vatable. If you are an agent, you earn commission for the land, you earn commission for the building, your commission is vatable. But the direct purchase of the land or building is not vatable. So these are the products that are not vatable. Basic food items, all medicals and pharmaceutical products, including medication, herbal products, educational books, material, fertilizers. So these are our products that are exempted from VAT. So electricity generated by generation companies, GENCOs, and supplied to national grid of Nigeria, bulk electricity trading, these things are not vatable. They are exempted from VAT. Electricity transmitted by Transmission Company of Nigeria, TSA to Nigeria, TSA to Electricity Distribution Company, DISCO. There is no VAT element in this transaction. Medical services, tuition related to nursery, primary, secondary, or tertiary education, they are not vatable. Under section 187, all these items are not vatable. Exported services, exported incorporated property, medical equipment, electric vehicles, all these are not vatable. So this brings us to the end of the class. I hope you enjoyed the class. I hope to see you next time, and then you enjoy yourself. Please do not Do not fail to subscribe, click on the like button, and then if you have a comment, you have areas that are not clear to you, please click on the link. Bye bye, see you next time.